Hey everyone, Dave Keller here with Market Misbehavior. In our previous video, which we linked to below, we talked about the NASDAQ 100, the QQQ, and a downtrend channel and the potential to break out of that channel to the upside. Well, now what's happened this week here in early November is that breakout has actually started to happen. Now, why is the NASDAQ 100 pushing higher? Well, it's all about the top 3 stocks in the technology sector. So when you see an index or an ETF like the NASDAQ 100 or the S&P 500 making a significant move to the upside or the downside, you can often dig one level or 2 levels deeper. Look at some of the sectors, the groups, and the individual stocks that comprise those indexes or ETFs, particularly the top weighted names, because those can tell you a lot about the dynamics of that particular stock or that particular ETF or index. Now, when you look at the technology sector, it's pretty top heavy with 2 particular names, Microsoft and Apple. Those 2 stocks make up about 45% of the XLK, the technology ETF, and about 20-25% of the NASDAQ 100 would be my guess. You add NVDA in there, which is the 3rd largest name in technology. It's about 50% of the XLK and about 25% altogether, maybe a little bit more in the QQQ. So when you look at those 3 stocks, it's all about the positive rotation, the lack of breakdown, and the potential upside follow through that is really fueling the upside strength in technology and in the QQQ. Today, we're going to look individually at those 3 stocks and look at them together and think about what it tells us about the overall state of the market in terms of growth stocks. Before we get to those charts, a couple things to tell you about. First off, don't forget to like this video while you're here. We would super appreciate it. Subscribe to my channel as well. I would very much appreciate that back. And here's one more thing I want to tell you about. Today's video is brought to you by Seeking Alpha. I'm a big fan of places that allow you to better understand the market environment. I think seekingalpha.com is certainly one of those. When you go to the website, I would check out the stock screener, particularly because it allows you to use Seeking Alpha's proprietary quant model. In my experience working with institutional investors, we always had what's called an alpha model or a quantitative model, which really modeled the characteristics of strong companies, demonstrating strong growth prospects and strong price momentum. Seeking Alpha does a really good job of taking that institutional level quantitative capability and putting it in the hands of individual investors. If you go to marketmisbehavior.com/seeking alpha or just click on the link in the description below, you can go right to a special offer. If you use the link, you get $50 off your first year and also get a 7-day free trial to check everything out. So go to marketmisbehavior.com/seeking alpha. Now back to the video. All right, so here's the QQQ. We're looking at a daily chart. This is very similar to the chart we showed in our previous video. Again, the link's in the description below. Talking about this downtrend channel. It's amazing how consistent, how really classic kind of textbook of a downtrend channel this is, with a pattern of lower highs. And that's where you start, right? Drawing a trend line connecting the highs in July, August, September, October. You can see here we've started to break through that level this week. You draw a parallel trend line down below and you can see it lines up really well with the lows in August and in October. So for now, it certainly appears as if we're getting an upside breakout in the QQQ. Now, why is that happening? Why is the momentum so strong? Why are the QQQs starting to work again? Well, it has to do with some of those largest names. Here we're looking at a chart of Microsoft, Apple, and NVIDIA. And these, again, top 3 stocks, top 3 weights in the XLK, 3 of the top, certainly the largest names in the QQQ. Microsoft and Apple, certainly the outliers, big mega cap names. NVIDIA a little bit smaller, but still big enough to talk about. So let's look at the 3 of these charts one by one and focus on the blue line that I've drawn on each of them. And that'll tell you a lot about why the QQQ is starting to perform fairly well. We start with Microsoft. Now, Microsoft this week is testing a new all-time high. The stock is trading up just above $368 a share. That's retesting the high that we saw in July. So we've basically recouped the losses that we had in August, September, October. Now we're retesting again back to the highs. You'll notice in the other stocks, they're not testing the new high. So Microsoft's certainly the leader. So think about that. The biggest name in the XLK and in the QQQ is making new all-time highs or threatening new all-time highs. That's enough to make the Q start to turn higher, right? I mean, because chances are other growth names are probably working pretty well. But the level I want you to focus on is 340, because Charles Dow taught us years and years ago, I'm talking 125 years or so, talked about how an uptrend is a pattern of higher highs and higher lows, and a downtrend is a pattern of lower lows and lower highs. So if you look at the downtrend in August, and then the sort of counter trend rally in early September, and then the new swing low that we had in late September, that's lower highs and lower lows. But now when we break above 340, what that does is it very importantly makes a higher high. So Microsoft no longer in a classic downtrend. According to Charles Dow, it's now technically in an uptrend of higher highs. And if you consider this a late October sort of swing low as a higher low, then certainly the evidence is more bullish than bearish. So as long as Microsoft holds that break above 340, pretty constructive chart, and a break to new all-time highs, 100% constructive, right? New highs are bullish, as as a mentor of mine used to say. The second largest weight in the XLK and in the QQQ is Apple. Apple, obviously, in the technology sector, in the hardware group, although it's really a conglomerate at this point, a technology conglomerate with hardware, software, cloud computing, and lifestyle devices, whatever you want to call them. Now, the chart of Apple looks a lot less like Microsoft and a lot more like the chart of the QQQ itself. I mean, really look at the Qs here over the last 3 months. Look at the chart of Apple. I mean, honestly, very, very similar, if not almost identical. We have a pattern of lower highs and lower lows. It's not as perfect of a channel as you saw with the Qs, but good enough for me, and certainly a pattern of lower highs and lower lows. Now, the chart of Apple is meaningful right now because it is clearly broken above trendline resistance. Just like the Qs breaking through the upper end of that channel sort of validates a bullish breakout. You're seeing that same breakout in the last week with Apple. Instead of making another, following this trend line lower, it's actually changing. Now, what are you looking for follow through with Apple? You're looking for a break above this October high because we're technically still in a pattern of lower highs and lower lows until we break above that October high, which we may be doing right now. We'll have to see through the remainder of this week if you get enough of a follow through above around 182, we'll call it the swing high from October. And then ideally you make a higher low somewhere up here around 170, 175, and that would make a rotation from downtrend to uptrend with higher highs and higher lows. So Apple really starting to rotate as well. Now that gets us to the third stock. Now again, pretty big gap in terms of market cap from Microsoft and Apple, which are very similar and some of the largest companies in the US. NVIDIA is sort of that next tier down in the technology sector with other stocks like Adobe and names like that, but still a large cap name to be sure. Now, if you look at NVIDIA, again, a different construction here, but the blue line that I've drawn here is right at $400 a share. Now, why am I highlighting that level? Well, look at NVIDIA year to date, right? You saw the rally from January through May, just this nice consistent pattern moving higher, and then a big gap higher in late May that put it from around $300 up to almost $400 a share overnight. That was the big gap higher. Then you can see it kind of stalled out around here, which you have what's called a shooting star candle. Might be a little hard to see. Right around that 400 level, we traded above it, and then look at how many times 400 has served as resistance in June, in August. We didn't quite get there in September, but pretty close. And then once again here in late October, and every one of those times 400 has held. For now, we're bouncing off of that support. So while it's not technically in an uptrend, right, we're not making higher highs right now. We'd have to get above 475 for that. I think the fact that stocks like NVIDIA have held support while interest rates are so high, while the environment for growth stocks is not particularly positive, charts like NVIDIA have failed to break down. They've actually held support very well. So as long as NVIDIA holds that blue line at 400, I would argue the chart is certainly not bad. At worst, it's okay, and it's sort of in a basing pattern, a sideways pattern. The thing with this, though, is it's arguably what you might call a complex head and shoulders pattern. We've covered this elsewhere on our channel. I'll put a link to the video. I think it was Las Vegas Sands. It had a really classic complex head and shoulders pattern. That's where you have a head, multiple left shoulders, multiple right shoulders, which you might kind of be doing here. And then when you break, if and when you break below that neckline, which I would argue is right around 400, that would really signal a dire situation for NVIDIA. NVIDIA below 400 is not a particularly bullish chart. But NVIDIA holding 400 is a stable chart, and NVIDIA breaking above 475 would be, once again, a bullish trend of higher highs. So with these three stocks, again, there's a lot of market cap represented on these three particular charts, but every one of them, I think, has a couple things to note. Number one, a key breakout or a key level to watch right now. With Microsoft, it's again, it's breaking out above 340 was the trigger. I think with Apple, breaking above this trendline resistance was the key, and I think with NVIDIA holding support at 400 was pretty key. Also as a level to watch right now with Microsoft is looking at the July high right around 360, 365, where we're kind of right there. With Apple, it's the swing high from October around 182. We're there this week. And with NVIDIA, it's 475, not too far above current levels. So all three of these, the blue lines have shown how this is more of a positive rotation, or at least a bullish implication. The break above the most recent swing high, or in Microsoft's case, a break to new all-time highs, could validate that rotation higher we were seeing in the NASDAQ 100, a lot of other growth stocks as well. What do you think about these three names, Microsoft, Apple, and NVIDIA? Which of them, if you had to pick one to buy right now, which one would you pick and why? Don't forget to leave a comment below and let me know your answer and how you justify that with evidence from the markets. Hope you enjoyed this video. For Market Misbehavior, I'm Dave Keller. Be well and stay safe, and I'll talk to you again soon.